For more than a decade, Rolex wasn't just a watch brand. It was treated like a financial product. The crown became shorthand for guaranteed appreciation. Waiting lists stretched for years. Gray market prices exploded. People spoke about steel sports models the way they talked about stocks or real estate. That illusion is now unraveling. And the collapse didn't start quietly. It started violently, in the one market that mattered more than any other, China. Right now, collectors and investors across mainland China and Hong Kong are unloading their Rolexes in massive numbers. Not because the watches suddenly became ugly, not because people stopped caring about luxury, but because the economic, political, and cultural foundation that supported the Rolex boom has cracked. Today, we're breaking down exactly why this is happening, what the data actually says, and what it means for anyone holding or thinking about selling a Rolex right now. From 2020 through 2023, the Swiss watch industry experienced something it had never seen before. Sales surged to historic highs. Prices went vertical. Waiting lists turned into multi-year purgatories, and almost all of it was powered by a single engine, Greater China. At its peak, Chinese buyers accounted for nearly one-third of all Swiss watch sales by value. When China was buying, the global market soared. When China slowed, the entire system began to wobble. In early 2024, that wobble turned into a collapse. Swiss watch exports to mainland China dropped more than 21%. Hong Kong sales fell close to 20%. Luxury conglomerates felt immediate pain. One major group saw its China sales fall over 27% in a single quarter. Another reported a 30% drop and a shocking 70% collapse in operating profit. Just 1 year earlier, those same exports had more than doubled. The reversal wasn't gradual. It was a cliff. Why Chinese buyers are liquidating. This isn't about changing fashion tastes. It's about financial survival. The core problem is China's real estate meltdown. For decades, property served as the primary store of wealth for Chinese households. That foundation is now collapsing. Developers are defaulting. Prices are falling. Liquidity has evaporated. Wealthy property owners are being forced to dump assets, not for profit, but for cash flow. Luxury apartments in Hong Kong are selling at 35 to 50% discounts from peak values. High net worth individuals are unloading secondary assets to cover losses. And Rolex watches were always one of the most liquid assets they owned. During the boom, steel Rolex models were treated like portable wealth, easy to move, easy to resell, easy to convert into cash. When real estate froze, those watches became emergency lifeboats. People aren't selling Rolexes because they stopped loving them. They're selling because their balance sheets are on fire. The political pressure nobody talks about. On top of the economic collapse came something more subtle, but just as powerful. The Chinese government has spent years pushing a doctrine called common prosperity. It's designed to reduce inequality and discourage overt displays of wealth. And this isn't just talk. The government's anti-corruption campaign targeted luxury goods aggressively. High-end watches were commonly used as gifts, bribes, and political favors. That practice became extremely dangerous. Academic studies show that imports of conspicuous luxury goods dropped more than 50% during key phases of the crackdown. Officials were publicly exposed and punished for wearing watches far beyond their income levels. Influencers flaunting wealth were banned from platforms. Luxury signaling became risky behavior. In this new climate, wearing a Rolex stopped being aspirational. It started becoming a liability. The cultural shift from status to shame. This created a powerful social reversal. In the past, a Rolex signaled success. Today, it signals scrutiny. A cultural trend known as luxury shaming has taken hold. Flaunting wealth now attracts resentment instead of admiration. As a result, Chinese consumers are pivoting toward quiet luxury, subtle craftsmanship, discreet brands, minimal logos, and understated design. Rolex sits at the opposite end of that spectrum. It is globally recognizable. It is loudly symbolic. It is instantly associated with wealth. In this new social environment, Owning a Rolex isn't just a fashion choice, it's a political and reputational risk. So people are selling, not only to raise cash, but to reduce attention. The China leak that lit the fuse. The market tension needed one final trigger. In early 2025, that trigger allegedly arrived. Documents began circulating on Chinese social platforms that were claimed to be internal Rolex files. They allegedly revealed production costs and profit margins with shocking transparency. The implication was explosive, that Rolex watches carried markups approaching 85 to 90% over manufacturing costs. For a population already under economic pressure and growing resentful of inequality, this reframed Rolex prices as branding theater rather than artisanal necessity. Then things escalated. Videos and images reportedly surfaced showing massive stockpiles of Rolex components inside Chinese warehouses, contradicting the narrative of extreme scarcity. The suggestion was clear. The legendary waiting lists weren't caused by supply shortages. They were manufactured scarcity, a deliberate strategy to inflate demand and prices. Whether every detail of the leak was accurate or not didn't matter. What mattered was the emotional impact. It gave angry consumers a story. We were manipulated. And once that story took hold, the sell-off accelerated. The shockwaves go global. China wasn't just another market. It was the engine behind global Rolex prices. For years, gray market dealers bought watches cheaply in countries with favorable exchange rates, then flipped them into China and Hong Kong at massive premiums. That arbitrage vacuumed up supply from the rest of the world and created artificial scarcity everywhere. A buyer in New York or London wasn't competing with local demand, they were competing with Chinese capital flows. Now that demand has collapsed. Those same watches are being rerouted back into Western markets. Inventory is rising, dealers are cutting prices, and the global secondary market is buckling. The Bloomberg Subdial Watch Index is down more than 40% from its peak. Pre-owned Rolex prices have fallen across almost every major reference. The Steel Daytona has dropped nearly 47% from its peak. The Submariner date is down over 20%. The Pepsi GMT is down close to 18%. This isn't a dip, it's a regime change. The death of the Rolex investment myth. The most important casualty isn't price, it's belief. The idea that a Rolex is a guaranteed appreciating asset is broken. Fewer models now trade above retail. Waiting lists are collapsing. Gray market premiums are shrinking. The entire logic of wait years or pay double is unraveling. Why wait 3 years for a Submariner when you can buy one immediately on the secondary market for the same price? Or less. The scarcity narrative is no longer credible. So, should you sell your Rolex? Here's the uncomfortable truth. If you bought a steel Rolex in the last 5 years as a short-term investment, selling, even at a loss, might be rational. The speculative phase is over. The volatility is real. The easy profits are gone. But if you bought a Rolex for personal reasons, craftsmanship, heritage, milestone symbolism, long-term ownership, the situation looks very different. Over long time horizons, Rolex has still delivered extraordinary appreciation. Some models have gained over 500% in 15 years. Watches remain one of the best-performing luxury asset classes historically. The engineering hasn't changed, the quality hasn't changed, the heritage hasn't changed, only the hype has changed. The Chinese Rolex crisis marks the end of an era, the era where watches were treated like speculative tokens, where brand names mattered more than craftsmanship, where scarcity was manufactured and profit was assumed. What replaces it is something healthier, a market focused on substance over resale, quality over clout, personal meaning over paper gains. If you bought a Rolex as a flip, the game is over. If you bought one as a legacy piece, nothing important has changed. The lesson China just taught the world is simple. Price and value are not the same thing. So now, I want your take. In this new post-hype world, which watch brand actually delivers the most real substance for the money? Drop your answer in the comments.